You know that feeling when you're walking in a shopping center or down the street somewhere and you walk past one of those glowing crypto ATMs. Well, currently I'm in Bali. I've seen a couple here and there, mostly stickers I see on laneways where I walk past. But I've seen, like I said, I've seen a couple, but I've seen them in Melbourne, where I'm from, and it's one of those weeks where a whole network of them just went dark. To be exact, 96 of them. AUSTRAC has suspended Cryptolink's registration for 3 months over basic reporting, failures, and ongoing AML concerns. Those machines, many right here, I say here, I always refer to Melbourne, but like I said, I'm in Bali at the moment, nearly home time, but let's not go there. So, yeah, in Melbourne, Sydney, and Brisbane, they're all offline. That's not a small local story. That's a signal. Bitcoin is trading right now at roughly 88,981 AUD and 600, I should say 62,998 USD. It's been grinding sideways for weeks while the rest of the world watches US inflation data, ETF flows, and the latest corporate treasury moves. But in Australia, the regulator just reminded everyone that compliance isn't optional. This segment is brought to you by cryptologic.com.au, your go to hub for in depth Aussie and global crypto news. Let's break it down properly. AUSTRAC didn't just issue a warning, they suspended Cryptolink's virtual asset service provider registration for 3 months starting mid August. The company operates 96 crypto ATMs. Most of them sit in major cities, including a solid chunk in Melbourne. The watchdog cited failure to meet basic thresholds, transaction reporting measurements and requirements, and a lack of response to information requests. This follows an enforceable undertaking from late 2025 and an earlier infringement notice. Australia already has one of the highest densities of crypto ATMs in the Asia Pacific region. Regulators have been tightening the screws for years because these machines are high risk for money laundering. Cash in, Bitcoin out, with limited visibility if the operator isn't doing the paperwork. At the same time, there's a more constructive story playing out. The RBA's Project Acacia findings landed recently with a clear message. Tokenisation in Australia is no longer a question of if, it's a question of how. Cross agency work is progressing on tokenized deposits, stablecoins sitting alongside bank money, and the infrastructure needed to make it real. Estimates suggest tokenization could deliver up to 24 billion Australian dollars in annual economic gains. So, we have two parallel tracks. On one side, the hard edge of enforcement on retail facing cash to crypto rails. On the other, the quiet institutional build out of the next layer of Australia's financial system. Melbourne sits right in the middle of both. Let's zoom out. Story one: Bitcoin has been stuck in a relatively tight range near 63,000 USD for weeks. Spot ETF flows have been mixed. Periods of solid inflows interrupted by outflows. Corporate holders, like Strategy, have been net sellers at times to manage preferred stock, dividends, and capital structure. Volatility has compressed to multi-year lows. Markets are waiting on the next clear catalyst. US CPI prints and Fed expectations have been the main drivers. Soft labor data earlier cooled rate hike odds, but inflation readings still matter. Story 2. Institutional positioning is still active even in the quiet. Paul Tudor Jones firm increased its stake in BlackRock's Bitcoin ETF. Israel's largest bank is moving towards offering Bitcoin, Ethereum, and Solana, trading via Galaxy. Sovereign wealth funds in the Middle East have largely held their ETF positions through the softer period. Story 3. Regulatory and political noise in the US continues. The Clarity Act timeline has slipped. The SEC delayed certain tokenization related proposals. At the same time, there's movement on the bank charters and White House engagement with crypto executives. The picture is messy, but the direction of travel for institutional access remains forward, just slower than many hoped. Let's put the pieces together for Australian viewers. Bitcoin at 88,981 AUD or 62,998 USD is roughly 50% below its previous cycle highs in AUD terms. The AUD itself has been a factor. Currency strength or weakness moves the local price independently of the USD chart. On-chain and flow data suggests the market is in a digestion phase rather than a full capitulation. Long-term holders continue to accumulate on dips. Exchange balances remain relatively contained. The fear-greed sentiment has sat in fear territory even while price has held 62k to 66k USD band. That divergence is worth watching. For Australians specifically, the dual narrative is important. Retail access via ATMs is being cleaned up, sometimes abruptly. At the same time, the institutional and tokenization rails are being built with more deliberate regulatory coordination. Project Acacia and related work reduce the legal uncertainty that previously kept larger players on the sidelines. If tokenized deposits and regulated stablecoin frameworks progress, the friction between traditional finance and crypto in Australia starts to drop. That matter more that matters more for the next cycle than any single ATM network. Price action right now is quiet. Quiet markets are where positioning gets set. Time for Cryptologic takeaway. Here's my read. The Cryptolink suspension is enforcement doing its job. High risk, cash heavy on ramps need proper AML controls. Operators who treat reporting as optional will get removed from the field. That's healthy for the long-term legitimacy of the industry in Australia. At the same time, the RBA and other agencies signaling seriousness on tokenisation is the bigger structural story. Australia does not want to be left behind on the infrastructure layer. Bitcoin itself is doing what it often does in these periods, holding a range while the narratives fight it out. Whether the next decisive move is higher or lower will depend more on global liquidity and institutional demand than on any single Australian regulatory action. I am not a financial advisor. This educational analysis, not personal advice. Do your own research and understand the risks. You know what the difference is between a crypto ATM and a Melbourne coffee machine these days? One of them still accepts cash and occasionally works. The other just got suspended by AUSTRAC for poor reporting. I'll see myself out. So, back to business. Where does that leave us? Locally, tighter retail rails, clearer institutional pathways. Globally, Bitcoin consolidating near 88,981 AUD, 62,998 USD, while waiting for the next macro catalyst. The smart money is watching both the regulatory cleanup and the quiet build out of tokenized finance in Australia. If you found this useful, hit the like button, drop a comment with your take on the ATM suspensions or the Project Acacia direction, and subscribe if you want more no nonsense analysis from an Aussie perspective. I'm Sash from Cryptologic. Stay sharp, stay curious, and I'll catch you in the Bitcoin and blockchain and out there, way, way out there. I look forward to it. Peace out from Bali. I'll see you soon in Melbourne. That's right. You got it, baby. You got it.